What's up, guys? It's Justin with a new video. Today we're going to be doing my daily recap for the day. So I did take around 3 trades today. I went 3 for 3. I've had a 100% win rate this week. We've taken 5 trades on the live, so I'm 5 for 5. Going into today, we're going to talk about my buys going into the day, what trades I took, what trades I didn't take. We did have Powell speaking today, so I did lower my size significantly. I traded around 25% of my position size today instead of my full size. If I did trade my full size today, it'd probably be up around 8K, somewhere around there. But again, we want to be able to manage risk, especially when we have a news day like today when Powell's speaking throughout the day. So it's always best to manage our risk and stay risk off. Cash is always going to be a good position to have. So let's jump into the market, talk about the charts, what I was looking at in pre-market, and look at the trades we took. So going into the day, first thing I want to start off on is looking just at ES. Looking at the 1 hour going into today, I did have kind of a mixed bias. I was a little bit bullish, but I was mostly bearish. And the reason why I was a little bit bullish is because I wanted to see how price action played out in the overnight session. And the overnight session, I was kind of expecting maybe a bullish push to the upside. We had a 1 hour fair value gap here that we bounced off of. And I wanted to see possibly a move to wipe out all of this low resistance liquidity, right? We have really no significant high here. I have this buy side level in because it's marked in because this is equal highs, but we have no really significant high here. So all of this now becomes what we like to call low resistance liquidity, meaning if we break one of these levels, we'll probably end up breaking all of it with a push up to the upside to possibly fill this imbalance and just have a big runner day. So that's what I was possibly expecting in the overnight session. When I woke up and I saw that we didn't get a push up, that gave me confidence that the draw on liquidity is probably going to be lower. Now, what I was looking at is this. Notice we have this 1 hour fair value gap here. Now, the way that I like to use these fair value gaps, especially on a bigger time frame, is, okay, if I'm bullish at this point in time, right, going into the day, market opened around here, somewhere down here under this fair value gap. That gives me the confidence in my bias. If I'm bullish, I want to see this fair value gap continue to hold. Notice we come down here, we continue to hold, bounce. Come down again, continue to hold, bounce. We should have bounced. If we're bullish, we should have bounced here and had those equal highs get swept. Notice we didn't bounce. We ended up breaking straight through this bullish fair value gap. So what can I expect? If we are invalidating bullish fair value gaps or bullish breakers, bullish order blocks, anything like that, that is telling me that we are bearish in the draw on liquidity is probably whatever the recent low is. So going into the day, seeing that we broke through this fair value gap, we can't seem to get a bounce off of it. That's telling me that the draw on liquidity is going to be this recent low, right? This now becomes our sell side level. So going into the day, going to the 5 minute, I have a clear draw on liquidity. The draw on liquidity is obviously lower. We're failing to hold bullish PD arrays. If we look at the overall trend as well on a bigger time frame, we've just been selling off the past couple of days, right? The draw on liquidity is obviously lower. I have conviction now for that. Okay, so I look for a trade. Let's say I want to look for a short entry, right? I want to see some sort of PD array get validated. I want to maybe see a sweep of liquidity. So I look down in the 5 minute, right? Okay, well I can see that we have a 5 minute fair value gap here. We have a 5 minute fair value gap playing out. All right, I have a PD array in my favor. Bearish fair value gap targeting whatever that low is. Okay, so I want to see how we react once we hit this level. Notice, come up, we put a high in, come down, ES comes back up into this 5 minute fair value gap. We end up sweeping this internal level, right? Sweep this 1 minute. This is where it's interesting. This is what I want you guys to pay attention to right here. Now, you could have entered in this 5 minute fair value gap. You could have. But I wanted to see every sort of thing align. I don't need to catch, an entirety of a move. I just need to get an entry where I know I am very, very confident with that. So I waited to see the reaction of this, and then I waited to see what the bullish fair value gap showed. Either we respected it or we disrespected it. Notice, once we come up here, we get, big kind of, decent displacement to the upside. This maybe could be considered market structure shift if, somebody might say that. Now, I wouldn't because I know the draw is obviously lower. Once we reject off of this and we have this bullish fair value gap, I want to see this bullish fair value gap get disrespected. Meaning, if this is bullish, I don't want to see us bounce to the upside. I want to see this become an inverse fair value gap, which is exactly what I did, and that was my entry. Once I saw that we broke through this fair value gap, we're rejecting a 5 minute fair value gap. We broke through 1 minute. This now becomes inverse. Once we broke through, I wait for the retest of this fair value gap. Now becomes inverse fair value gap. I enter short. stop at the top of the candle. My first price target is the draw on liquidity, and then I let my runner go a little bit more, and I ended up scaling out near the lows somewhere down here. So this was the first trade I ended up taking today. Again, 25% of my size, a little bit less. Still capitalized on the move. Happy with the gains. That was the first trade of the day. Again, confidence, aligning all these things. I have a bearish bias on a bigger time frame. Remember, we failed to hold that 1 hour bullish fair value gap. We failed to hold this 1 minute fair value gap. We just rejected off of a 5 minute fair value gap. We just swept this 1 minute high, right? All of these things are gaining confidence, gaining conviction with my setup, right? This gives me high quality opportunities. So the next trade I took was a little bit of a scalp, and it was a silver bullet setup. Notice silver bullet, right, happens at 10 a.m. to 11, targeting whatever the opposing liquidity pool is. It's always going to be that first fair value gap. So if we look at the time right here, 10 a.m. opens right here. This is the first fair value gap that gets created. We pull back into this. I enter short, targeting whatever the opposing liquidity pool is. A little bit of a scalp, all right? It's that recent low, and that was my target. Ended up scaling or taking pretty much all my contracts off when we ended up selling off to that low. So that was just a little bit of a scalp. That was like maybe a $500 trade right there. Not too bad. But great, again, another great trade add, right? Silver bullet, taking advantage of different models that I know, have confidence with. Just little scalps. Not too happy with that one, right? It's a good trade, but again, a lot of the times, guys, you do not need to catch giant moves. All you need is this. This is a 5-handle move. 5 handles is all you need to become profitable, to change your entire life, to not work a single day in your life ever again, to not work a 9 to 5. All you need is 5 handles every single day. Not even every single day. Every couple days, and maybe even once a week. 5 handles. You don't let all of these people on Twitter, all these people on YouTube tell you that you need to catch, monster moves. I caught, 80 points, 60 points today. It does not matter. It really does not matter, because all it matters is trading is one of the best jobs because you can leverage what you do. It doesn't matter if you're trading, 5 points, 10 points, 15 points, 20 points. If you have leverage, you can take advantage of a short-term move and make a lot of money. It's just having consistency and knowing what moves actually, you're consistent with, right? What you're good at. In this example, I'm confident with a 5-point move here. If I'm confident with it, why not take it, right? I don't need to catch an entirety of a move. All I need is 5 handles for me to make money. So after that, market ended up chopping. At this point of the day, I was pretty much done. I ended up closing my screen, and then I came back later in the day to check the market. The next trade I ended up taking in the day, we'll go to a 15-minute here. Actually, we'll go to the 5-minute first. Looking at the 5-minute here. Now, this trade was my scalp model. Now, my scalp model, I've made a video on this in the past. If you haven't checked it out already, I highly, highly, highly recommend going to check out that scalp model video. What it is, how I trade it. But I basically have created sort of my own model that I trade that I've kind of named the scalp model. It has to do with, following trend move. SMT is in the play, premium and discount. A lot of different things that apply to it. I won't explain a lot of it in this video, but I'll talk about the exact trade that I took. So looking at ES, we have a clear high here on the 5-minute. Looking at the 5-minute fair value gap here as well, ES has a low put in, starting to consolidate. Again, in a very bearish trend. Now, if we're bullish, I would want to see a break of structure to the upside, right? We just swept this liquidity level. Now, I want to see displacement to the upside. Notice, this would now be our break of structure. But notice we get no displacement, no candle close. We instantly come up, sweep this level, instantly reject to the downside. What does that tell me? We're probably going to see more downside. So zooming in on the 1-minute, you can see ES came up, swept this low. Now looking at NQ at the time, NQ is nowhere near this high, right? Looking at this high that was formed at 1017, we can see ES came up, swept this high. NQ nowhere near to sweep this high. This is now an SMT. This is one of the things I need in my scalp model. Next thing I need is a pullback to discount. If I go from that high that was created to the low, we can see NQ has now retraced back to discount. That's another thing I need. Another thing I need is a clear trend. Looking at the 15-minute chart, look at NQ. Clear trend to the downside. A lot of these things are starting to align now. What's the next thing I need? After you get an SMT, after the SMT is in a clear directional bias, you've pulled back to premium, wait for the rejection of the SMT, and you take whatever the first fair value gap is. So looking at NQ, we get the sell-off. First fair value gap created. I don't need a break of structure with this model. First fair value gap gets created, pull back into this. I go short, targeting any sort of PD array, meaning fair value gap, order block, whatever it is. So I go to a 5-minute. looking at NQ. And I target this 5-minute fair value gap right here. This was my first target. I take off 75% of my position here. I let the rest run to the recent low. Got a beautiful entry. Again, look at the drawdown on this. Almost no drawdown, super tight stop loss. Great risk to reward on this trade. Take off 75% in this fair value gap. Around risk to reward of 3. Great trade. Let the rest run. Ended up coming back up. Last 25% of the position got stopped at break even. So those were the 3 trades that I took today. Again, even on Powell days, a lot of the times, I do not recommend, if you are an inexperienced trader, to trade news days. Don't trade Powell. Don't trade, FOMC. Don't trade CPI. Any of these days, if you're inexperienced, do not trade. Now, a lot of people come up to me. They're like, dude, you made 2K. Why'd you trade news today? Because I have confidence with trading news. I have experience with trading news, and I'm going to put risk on the table. I'm willing to lose for news. I traded 25% of my position size today, and I still went 3 for 3 on a news day, and I still made over $2,000 on a news day. It doesn't matter if it's news. If you have confidence with what you're trading, you're going to put solid risk on the table, right? That is what proper trading is. I understood it's a news day. You think I'm going to put my full size? Absolutely not, because the market's probably going to be a little bit more unpredictable. I even went 3 for 3, even in an unpredictable market, right? You got to recognize when to put risk on, when to not put risk on. Today's one of those days I like to lower my size. I like to stay calm because I don't want to get anxious, right? You can ask anybody in the Discord. We were super calm in the live. A lot of the times, pretty much all the time, when I'm trading on live in the Discord, I like to show by example. I want my team and my members to look at me and say, you know what? That's how I want to trade. When I enter something, it's not based off emotion. It's not based off of any other bias, based off of my confident system. And when I see it, I'm going to execute without hesitation. So I hope you guys learned something from this video. If anybody has any extra questions, feel free to leave them in the comments. And I probably plan on doing these trade recaps, hopefully a little bit more often. I don't know if I'll do them every day or so, because sometimes I trade, sometimes I don't. I definitely want to start, even on losing days, I want to post these, right? Going over, losing days, what I did right, what I did wrong, understanding those days as well. So hopefully you guys learned something from this video, and I'll see you all in the next. Have a great day. Peace.